Huge weekly dividends. Today, we're going to dive into one of the highest yielding weekly pairs and talk about its underlying stock as well. I hope you guys are ready for TSYY by YieldBoost, a GraniteShares weekly dividend ETF. Of course, if you are interested in weekly passive income, don't forget to like and subscribe, and let's grow our portfolios together. Now, although you guys know that I love my dividends, GraniteShares does have a whole slew of different ETFs. We can see they actually have YieldBoost, which is what we're talking about today. It's their newest series where they're getting the maximum amount of dividends possible, right? We're talking 100+% distribution rates, but we have to track the NAV. Then we have their leverage versions, which is a 2x leverage on popular stocks like Tesla, Amazon, and many others. We have their equity-focused ETFs, gold, commodities, and income. They have one income ETF called HIPS. That's a high income, and it's pretty solid, but it doesn't have the yield that the YieldBoost ETFs have. And these weekly payers are paying big. So we have some new ones, so let's jump in and talk about it. Now, I will say, when I first started talking about the YieldBoost ETFs, there were like 5 of them total. And now look at this. We have, 10 plus? And what's really interesting is there's a big grab in this income space because people want dividends. They want their money now. And so we see they now have AMYY, their AMD ETF. They have an Amazon, Bitcoin, Coinbase, Hood, MSTR, NVIDIA, Palantir, QQQ, SMCI, SPY, and Tesla. A lot of different options, and they range in size. The smallest is Amazon, looks like it's about 700,000 in AUM, very, very small. And the largest looks like, no, it's TSYY, 344 million AUM. That is remarkable. And there's a reason why people are loving TSYY right now, and that is because Tesla stock. Tesla stock has been doing extremely well. And we're going to dive into TSYY in particular, but when it comes to all of these ETFs, you definitely have to play the market timing correctly. You want them to go up. These are very interesting and very unique ways to create income, but there is a catch. You have some risk, you have some factors that you should know about if you're interested in buying income-producing ETFs. The distribution rate is unheard of, 151%. Now, there are, again, some caveats to this, but the way that TSYY and all of the YieldBoost family work is they're selling puts, which is vastly different than a lot of other strategies that we've seen. But the goal is to generate income through these puts. And so they're going to sell these put strategies, and they're selling them on leveraged ETFs that track the 2x long of the Tesla daily movement. And so the goal, of course, is current income. And then a secondary investment objective is to seek exposure to the performance of the underlying, which, of course, we've seen with a lot of these products. And it doesn't usually work as well, especially on an income product, to have that growth aspect. We really are buying these for the distributions. And that's where TSYY shines. And people are loving it because Tesla has been doing extremely well. So you can go through, and I recommend, if you are interested in any of the products that I talk about, in any of the ETFs, dive in and check yourself what you think. So we can look at the dividend history. It is paying every single week. And we can see per share, it's 21, almost 22 cents, 22 cents in the 20-cent range, which is solid, up into the 30s actually in June and July, because this ETF is like $6 or $7 currently. So it is paying big, really big actually. And that's very, very impressive. But that, of course, is the goal. And the risks that go with this are things like NAV erosion. If Tesla stock does not do consistently well over time, if they fall through those puts and they have to purchase the stock at a higher price than what it's worth, well, that's when they take a loss. And that's what you have to figure out is, do you think Tesla is going to continue to go up? We are also capped, of course, on some of the upside simply because they have these put options and they're using that to create the income. So you're not getting the overall growth that you would for just holding something like Tesla outright. So what I love about the YieldBoost ETFs is they say exactly what they are. You know, it's a different strategy than what we've seen, and the yields are absolutely phenomenal. But you have to have a lot of faith in that underlying stock. So the way I've seen people trade these, and I'm going to pull up the fact sheet, the way people are trading these is they are almost swing trading them. You can long hold them as well. It all depends on your strategy if you think Tesla in the long term will do well. But they're getting weekly dividends and they're trading off based on what the market is doing and what Tesla stock is doing. So we already read this and we can see the NAV over the last month is down 5%. 3 month is actually up 5%, but year to date it's down 23.5%. This, I believe, is not including the dividends. I believe it's not including the dividends, but that's a very important factor as well. It's just performance. So NAV versus market price, and then we have Tesla, the underlying. So it's doing relatively well, and Tesla has been absolutely killing it lately, which is amazing for this fund because, again, we're using a 2x leveraged version. So it's definitely higher risk, and Tesla itself is a very risky stock. But what does that create? Amazing premiums. Absolutely amazing premiums. So although TSYY is likely not outperforming Tesla, let's take a look and see how much money you would make on the income side and how it holds up to its underlying stock. So we can see TSYY has underperformed Tesla, which is, again, what we experience most of the time when it comes to these income-producing ETFs. Total return since the inception of TSYY, which was in December, we've almost hit 1 year of TSYY. And I will also state that it was a monthly payer at the beginning. It converted to weekly about halfway through the year, I would say. But it is down 16% versus Tesla's 6% with dividends reinvested. Now, what's key with this is a lot of these different ETF issuers, YieldMax, GraniteShares, they want you to reinvest the dividends in these cases. And let me give you a little breakdown as to why that is. They are paying out such an insane amount that portions of it technically do come from the NAV. So if you're reinvesting, you're still getting that high yield, but you're not able to use your income. So the goal is they give you the option. Do you want to reinvest? Do you want to pull the income? But over time, if everyone's pulling the income and not reinvesting, they are going to go down in price. It's just the way the options work because they're not able to capitalize on the overall gains. So it's some very important factors that weigh in where I think if you are going to be interested in this style of investment, that reinvesting some of the dividend will help the fund. But everybody kind of has to do it in a sense to make the fund bounce back, right? Because the dividends are so high, they're paying out so much money. But that being said, some people just love insane amounts of money and don't care about the NAV overall. So what I'm going to do now, though, is I'm going to showcase a different time period because Tesla, since the end of last year, hasn't been great. It was very, very rocky for a long period of time, but I want to showcase how it's been performing just over the last couple of months and see what you guys think. Now, when we cherry pick the dates and we do August to current, October, we can actually see that Tesla still outperforms as expected, and I'll explain why. Tesla is up 36.63% in this time frame, whereas TSYY is up 20.8%. But people are loving TSYY because the income has been outstanding. They're making tons of money on their dividends, even though it's not keeping up with pace with Tesla, especially when it comes to the price. But that's what dividend-focused investing is based on, especially if you're wanting high dividend output. Now, the reasoning behind this is we've seen Tesla do extremely well over the last couple of months. And because TSYY is utilizing an option strategy of selling puts, they are capped at the overall gain of what Tesla does. So particularly when Tesla does super well one day, TSYY is not going to track that exactly. It's just the way the fund works. And so that is one major component as to why Tesla is running more so than TSYY. But again, you're not getting the income. So in an ideal world for TSYY, what we'd want to see is Tesla steadily climbing. We don't want it to just run like mad where TSYY can't cap or is capped on all of that return, but we do want to see it consistently stay above that put price where they're going to utilize the options income, getting juicy premiums on this stock that is crazy volatile, but again, not having explosive growth where you would do significantly better holding. And this is why people have been loving TSYY recently, because Tesla, albeit it has been running like mad, those that need income or rely on income for any number of things, some people like to use TSYY to buy more Tesla every single month, every single week, I should say. But so if you're okay with that, if you're okay with a little bit less of the upside potential and you think Tesla is still going to continue to move upward, but at a pace in which the put options will be successful, there you go. And that's what it does that's how it goes for all of these YieldBoost ETFs. So it's a particular style of income investing, I would say, but very unique. And so far, the distributions have been amazing. overall NAV, it is some outperforming, some underperforming some of the other income-based ETFs, but it all depends on what you're looking for. And that is key. And that's why I thought this would be a really good video. You guys have been asking me about TSYY, and what I'm going to say is, if Tesla keeps moving as it does, TSYY is going to do amazing. It really is. But it comes down to Tesla. And we can even see on this chart here that Tesla has pulled back a little bit and caused TSYY to pull back a little bit as well. But if we see Tesla continue the moves that it has been doing, we could be in for some nice big dividends from TSYY. But I want to know your thoughts. So let me know down below in the comments. Let me know, are we buying TSYY? Does NAV erosion, are you not worried about it? Are you worried about it with these YieldBoost ETFs? I'm curious to get everyone's feedback. And if you're interested in tracking all of your weekly dividends, my Google Sheets version of my tracker is now available. It's not for free, but I will link that down below for those that are interested. And of course, if you like this video, don't forget to like and subscribe. Check out these videos popping up on your screen right now. I bet you're going to enjoy them. Thank you guys so much for watching, and don't forget to spread some love today.